Good evening, good afternoon, good morning, wherever you are around this beautiful world. Welcome to another Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, and I am so grateful for all of you being here with me this evening. So if everybody can drop me a one in the chat to let me know that you can hear me loud and clear, quick sound check. We can get things rocking and rolling, and I definitely appreciate it. Thank you. All right. So welcome to those of you who just joined us a few seconds ago. So let's make sure that we get ready to go and turn off any and all distractions. Grab a pen and paper to take notes. And let's make sure, as always, we continue to do an amazing job of participating and engaging. Quick disclaimer, trading the Forex market is risky. Never risk money that you cannot afford to lose. I'm not a CTA, which stands for Commodities Trading Advisor, meaning that everything that we cover tonight is for educational purposes only. We can show you our strategy. We can teach you about the technicals and the fundamentals. We can show you where we're looking to get in and get out of trades. But at the end of the day, you are 100% responsible for your own account and your results. So definitely busy day, right? Busy day today with the FOMC meeting. A little wild and wacky, kind of spiked everywhere, right? Some of the dollar pairs before it settled in into some dollar strength. So it came out in the beginning. It was a little sketchy, saying, "Hey, we're looking to taper," but in the very beginning, really didn't say when. Then it came out that they're looking to start the tapering process around November and start making some progress on that, which is kind of the market kind of. That's what they were thinking, right? They were guessing that he was going to say around November, the tapering would start. And then what gave the dollar some strength was that he said that they may be looking to, this is Chairman Powell, right? Federal Reserve Chair, looking to raise the interest rates, start to do that in 2022, right? So before it was 2023, possible 2 rate hikes in 2023. Earlier part of the year, and now he's saying, hey, we've got a possible rate, may need to raise it faster than previously expected. So overall, you've got some dollar strength on that. If you take a look at Forex Factory, tomorrow you've got German manufacturing PMI coming out of the Eurozone. That's going to be important. And here you've got a monetary policy statement coming from the Swiss National Bank. So that's going to be important tomorrow for the Swissy. And then here you've got monetary policy summaries and statements and news coming out around 7 a.m. Eastern Standard Time tomorrow for the pound. Okay, so important news coming out, right, in regards to monetary policy from quite a few countries, right? That's normal. That's how it happens on the economic calendar. That's why we pay attention to it, so we don't get caught with any surprises. So as we take a look, we can see that once the dust settled on the US dollar and the market reaction, you can see that if you look at our 4-hour, that you still have, right, dollar strength to the upside. Okay, so we still have a fairly bullish dollar, right, off the swing, right? We got that 8-6 pullback, that's our C. And we can see that we've got this C to D push. So we will see. Now, we'll wait on, we should have coming up Friday. You got Powell speaking again. So you want to look out for that. And then, of course, beginning of next month, the first Friday, you're going to have your non-farm come out. So looking at those job numbers. So that's what happened with the news today. So any questions on that before we get into the charts and start looking at some setups? No? Okay. Welcome everybody who just joined us. Everybody should have control of your microphone. We just asked that if you're not answering a question, let's make sure that we keep our microphones on mute. Yep. No? Okay, thought I had a question. All right, so let's get things rocking and rolling. Just posted a Euro USD setup idea, okay, in the Telegram. So that's there. So we'll start out tonight taking a look at that. Another 80-20 play. We eventually got that D extension hit on that capital fib. So we were talking yesterday about the smaller play on that type 2 setup that played out to at least TP1, and then price continued to push down. So this is at where we are now. We've got a brand new, hey, what's up, Shauna? We've got a new capital down AB fib on the euro dollar. Okay, so what we're looking for is a potential rally, right, into our sell zone. Okay, so we've got an 80-20 setup, so we may look to buy to that high price. Okay, and then if we get dollar strength to continue, then we can look for a Euro USD short potentially. We'll see what the news looks like coming out of the Eurozone tomorrow with the German manufacturing PMI to see how those numbers come out and affects the euro. And then we already know that we're dealing with some dollar strength. So we'll see how that goes. If you look at this from a daily time frame, you can see how we just ended up in the range, right? So we had a couple ideas and scenarios early on, right? Like we had a fib level here because we were thinking, hey, we don't have that 382. We didn't have that 382 yet, which we still don't. So there's still potential there. Our stochastic is in the buy zone. But right now, we're in the range. We even had it drawn up where we had the potential of a head and shoulders, but it pushed past what would be that right shoulder and continued to push down. That's fine. So you ended up range bound. But we had the direction right. And that's what matters, which is to the downside. So we've been playing the B to C moves, then the C to D moves to the downside. All right. So counter trend, then with the trend. And this is where we are now. Okay, on the Euro USD. Again, trading what we see. So here's that range boxed out on the 1. Okay, so there's the downside move off the trend line play. And then we're playing these B to C counter moves, buying to the high prices, and then shorting once we get the high price there. So you could be a bull or a bear, or you could be one or the other. However you choose to do it, the key is getting that direction right and understanding how the Fibonacci sequence works. So this is where we are on the Euro USD. We've got a 1 hour stochastic in the buy zone, and we have a daily stochastic that's in the buy zone. Now we may get a push down, right, to this weekly support to test it just like we did here. But at the end of the day, we would like to see some sort of retracement level. So if price pushes down and breaks this B level here and pushes down to this weekly support, that'll put us right in that 118, 127 zone. All right, then maybe we get to push up. So that's the play. Any questions on the Euro USD? No? All right. So another one that I want to take a look at on the Euro side right now is the Euro. You have a question? No? Okay. Is the Euro CAD. This is one that I'm keeping an eye on. Again, we have the news coming out tomorrow. This is giving us signs, right? We've got a swing low that formed. Okay, here. So beautiful retracement. Okay, but if you zoom out a little bit and you take a look at it, right? So here was this old, right, level here that got taken out. Okay, CD, this forms your new AB, and we got it taken out. And we know, right? So this was our old, right? Let me back up a little bit so we can see how this flows, right? Because we look for this all the time. So here was our A, our B, here was our C, and then our D move. Okay, so we know that our old C off that last fib becomes our new A. Okay. We know that becomes our new A here. And we know our old D becomes our new B, like so. Okay. All right. So this on a EuroCat was a beautiful 80-20 swing, right? That took out all three profits take profits on this down AB fib, took it out, and we know that what happens usually is that, not all the time, but usually when you get an A taken out, you get a large correction. And that's exactly what we got on the new capital up AB Fibonacci here, okay? So this level got taken out, okay? And if you're just looking at price action and structure, you say, hey, a level of resistance got taken out, and we had a monster pullback and a correction to the downside, okay? But now, right, we're looking at that euro. We got euro news coming out tomorrow. And if you look at this here, you've got this battle. See how this down ABCD move overall occurred here? So if you could put this on here with the smart fibs, okay, you can see here that you've got beautiful confluence here, okay? All right, so mark that one down and keep an eye on it, right? You got beautiful confluence here. And yes, it's almost, on this down AB fib, it's almost a TP1. But the reason why I want everybody to pay attention to this is because you've got that age-old battle between the bulls and the bears, okay? X to A to B, okay? B to C. So you got a Gartley, right? Price Gartley. And now you got this U-turn level, okay? So it falls right in line with that fib action, with the smart fib, okay? Just like that. So if we get bullish, right? If we get bullish, and this is going to make a C to D push off of this, if that euro gets strong against that CAD, right, and remains strong, then you're looking at here, we've got about a 786 retracement level. Then you can expect, if that euro is going to get long, you can expect a 127D extension, which that pushed this here, okay, almost 200 pips away. All right, so that's a potential play there. So your initial shorter term targets here, your 382, your 618, the top of your A boundary here, okay? And then if it pushes beyond that through the push zone, then you're looking at a 1.27 extension based off the retracement level. Okay, so I'll take that off, and that's what that looks like, okay? So we're within the AB boundary, okay, like this. Okay. And we'll see how that plays out. All right. Any questions on that? You guys want me to go over that again?
Yeah, if you don't mind.
Sure. Okay. So in essence, you got a new AB boundary here on this fib. Okay. And this is what we like to call the battle between the bulls and the bears, where you get that clean ABCD move, right? So you take this here, this is pretty much an ABCD move to the downside like that. Boom. Okay. ABCD move. If you put your smart fibs on there, it's just going to run your smart fib. Okay. But the overall structure with this move here was this. Here. See this here? You see how this just didn't go clean and just continue to break out like this, right? Up through the zone. Okay. It Gartleyed on us here. Boom. Like that. ABCD move back down to the downside. So here's your geometry for your harmonic pattern. Okay. All of your harmonic patterns are derived from Fibonacci ratios. So we say it all the time. This is why we start out teaching people the Fibonacci sequence, because everything else is built off of that, right? So instead of this being all we do is we add the X leg as the impulse leg here. Okay, so this your X to A, your A to B, right? And you can see these different patterns that the smart pattern is drawn up, because it's all based on the level of the Fibonacci ratios, what forms your harmonic patterns, right? So that's why once you develop the spatial intelligence with the fibs, then the transition to seeing a harmonic pattern isn't so difficult. It just takes time and reps, right? So like that. So there it is, okay? That M type formation, right? That M type formation, like this, right? Like that M type formation in the zone. But you see how it's still within the AB boundary, okay? So the way harmonics work is that because this is completed, the way the harmonics are drawn is that, see this A, B, C, D, like this. So this, let me go back. This is pretty cool how it plays out. So this A, B, C, D move, right? A, B, C, D move. They look at this move in its entirety, okay? So they look at that as in its entirety. So we know if we get an A, B, C, D, then our old C becomes our new A, and our D becomes our new B. So the way the harmonic ratios work out is that this is a completed leg. So how they set up your targets is that they pull it from the high, which is the C, to the low, like this, okay? And that in essence is your new down AB boundary, okay? So then how they set targets up, right? If you ever use any type of scanner or anything like that, right? So in essence, we're teaching you how to actually just become the scanner, right? To where you don't need it. So the way they set the targets up always on harmonic scanners are your 382 is your TP1, your 618 is your TP2, and right, your TP3 is the top of the boundary, right? Because we know if we take that out, then we're looking at a potential trend reversal, not just a correction, right? Not just a correction like so. Boom, price corrects and then heads back down. If it continues up and takes out this A level, then you're looking at it for price to reverse off of this pullback completely, okay? So this is why we start out, right? The method to the madness is why we teach, is how we teach everybody how to, okay? We teach everybody how to see this move consistently, right? See this move consistently, A, B, D to C. This move consistently, because what can happen is you can have it where if the downtrend is intact, you do get it at times where you get a push up, a pull back, and then a push up into a key zone. Well, in essence, what you're seeing a lot of times is what? A to B, right? B to C, like that, and then back up, which is a harmonic, okay? So it's just training your eyes. It takes time, but if you can see the new A, the now AB, your impulse leg, and then you learn how to play the B to C reversals, okay? It all starts to come together over time, okay? Over time. So that's why we show you how to be profitable with the B to C move, okay? Because we know price likes to retrace, but also, right, you'll start to see and train your eyes to the potential for harmonic patterns, right? So if you don't get a clean move back to a 61.8 and then say price accident just continues to the downside, right, and breaks out to the downside, what'll happen is you'll get something like this to happen, where price will come to a particular level, right? It'll come to a level like this. Okay. It'll move up, it'll pull back, and then it'll come right into a key zone like this, okay? And that's when we tell everybody, right, how we're training everybody, hey, look, when you get those sub tips running to the upside, right, on this B to C move, then look for confluence, right? If you get a new sub up AB boundary around one of these key areas on the major fib, and you look for confluence, right? Now you're starting to train yourself to see potential reversal, potential correction. But what you're really training your eyes to see also are harmonic patterns that are forming to take you right to the spot. All right. So that's something that we'll continue to work at, right? As people get more and more familiar with the B to C moves and understanding how the Fibonacci sequence works. But that's how you spot that. So if we go back to the Euro CAD, right, you can see where you have the potential for that. happening. Okay. Denise, you got a hand raised. What's up?
Yes. Thanks for mentioning the harmonic patterns, but what is the purpose of those?
It's measuring moves in the market, right? And it gives you a formation visually, right? It's really an extra point of confluence, right? So it's almost like when you have like harmonic scanners, what they really are is just indicators, really. It's like an indicator. Your Fibonacci tool is a form of an indicator in a sense.
Okay.
So it's helping you, those patterns that are forming historically, right? So based on historical data, when you look back, those are potential key U-turn points in the market, right? And so if you're trading reversals, those harmonic patterns are powerful when they set up because it's taking you right to a potential high probability U-turn point. So what we're showing you is that, hey, when you're using fibs, these key levels are high probability U-turn points in the market, especially when they are combined with structure, right? Especially when they're combined with structure, right? When you look left on the chart, you see past levels, price levels that are respected, then that's what so it's just another way, right, of showing you that, hey, we're in a key zone. But the beautiful thing about how we set things up to teach people the fibs first is that you're already kind of seeing that, right? You're already kind of seeing that, okay? Oops, you're already kind of seeing that already. So even if you've never seen, right, a harmonic pattern, if you don't see it, you know I'm within my AB boundary, okay? So for example, if I limit it in, because I got an up AB boundary and I'm bullish on the Euro CAD, if I limit in at a 61.8, I'm already there. If I limit it in at a 786, which is what I like to do, I'm already there anyway, without even seeing a harmonic pattern. The harmonic pattern is just giving you that extra confluence to say, hey, if I'm looking for an optimal entry, right, to put myself in an area of highest probability, maybe if I'm using harmonics and I understand harmonic projections, right, in order to get this Gartley type of scenario, that this C to D has to end up here at the 786 level, right? If that's my projection off of a harmonic, then I could potentially eliminate this order and say, this is my maximum entry point. It's the 786. You get what I'm saying?
Yes, thank you.
Yeah, you're welcome. You're welcome. So because you wouldn't have it, you would either have another pattern or a pattern that's not valid if price action didn't come back to the 786 level. So you can see the ranges when you hit it, right? You can see the ranges that it plays within, and those are all Fibonacci ratios. Those are all Fib ratios. So if this pattern right here, if you took this pattern right now, you would be at TP1 at that 38.2. See?
Okay. Yes.
Right? You would be at TP1. So just like how when we didn't have it on the screen, how we just dropped the fib like this. See that? You're still in that same zone. So it's just amazing how the mathematics work out.
Okay.
Yep.
Thanks so much.
Oh, you're welcome. You're welcome. Juan Wilson, aha moment. Awesome. So, yep. So we're taking everybody somewhere, right? But if you just understand how the market moves in ways, you can figure a lot of things out about this market and then get consistent at it, right? So a lot of times the issue is people, right? A lot of traders that I've worked with in the past, and just period. One of the things that kind of stifles the progress of a new trader, especially, is they kind of get what we like to call in the industry trade strategy drift, right? Where you just keep drifting from one strategy to the next, and you never really stick with anything long enough, right, to get consistent. When in reality, now I'm 6, 8, 10 strategies deep, when if I would have just stuck with what I was doing in the first place, and that's just not with this strategy, that's with any strategy, right? You would be a lot further along, right? So that's how people get caught up in it, and it extends the learning curve, right? Because it's so much. Now your mind is overload. Then you end up getting paralysis by analysis because you're trying so many different strategies and you never really settle in on one particular method of trading. So, yep, just wanted to throw that in there. All right. Yep, Sheldon said I'm there. Yeah, absolutely. Absolutely. So that's, I mean, I've been, and I was like that in the beginning, but here 5, 6 years later, 7 years later, 7 years actually, right? This method, just doing the same thing over and over and over again, right, is what led to the consistency. So just something to keep in mind, no matter what strategy you settle in on, whether it's this one or another one, just settle in on something, all right, to get consistent. All right, so that's my hope for all of you. So that's it on the EuroCat. Anything else regarding this pair? If you're super conservative, right, and you say, hey, I'm still structured I'm within the AV boundary, but I'm still structured to the downside, then what you want to do is this, right? So I can play the probabilities on this and have my limit set. Okay. So for example, a limit at the 61.8 on the buy limit put me in drawdown when it came down to the 786. But I'm pretty much back at break even and in profit on this trade. Now, my stop is below, right, my A boundary. So if that stop gets hit and this continues down, right, if this continues down, right, actually a little bit lower than that, right? If this continues down, then you either come to the A boundary and you get a double bottom and it reverses and pushes back up, or it takes out your A. Well, you should already have your math worked out, right? So if it takes out that A, what am I out? Am I out 0.5%? Am I at 1%, 2%? You should be comfortable with that, right? You should be comfortable with that before you even take the trade, okay? So that's what brings the peace of mind in taking a setup to where, hey, if I see it, I'm pulling the trigger because I already know and I'm comfortable with what I can lose, not what I can gain. I'm comfortable with what I can lose. Become fascinated with what you have at stake to lose, right? That's the first thing that you figure out on your setup is what can I afford to lose? So if you lose this trade, you should be good. Okay, it's on to the next one. It didn't work out. We don't base our success on one trade. We do it on a series of trades over time, okay? So that's very, very important to understand. So if you're super conservative, right, then you say, you know what? I see the harmonic, I see all of that, but if I'm gonna ride this up and think that this is gonna be bullish for a longer term, then I need to see a trend line break, right? I want to see this trend line break to the upside like this. And if I get a retest, and at the time of that retest, if my stochastic is back in the buy zone, then I'll look to potentially draw, right, another counter trend line like so, like that at that point. I'll have a fib level potentially. I have a swing high on that backside. Then, okay. So if then I'll look to go long. So however you want to play it. When I'm limiting into trades, right, I'm trading small. I'm breaking that up, right? If I'm at 0.5%, okay, 1/4%. If you're at 1%, 0.5%. Because I know if this move takes place, right, if that break of that trend line and that pullback takes place, I can always scale into that order. I can scale in. I can put another 0.5%, right, as the trade moves on, and then eventually manage my stop. Okay, but giving your trade room to breathe, the power of trading small and compounding and scaling into that trade. Okay, so that's how you can work these scenarios. So if we go back on this setup and we look at this initial, right, the move previous. Okay, so look at how many opportunities that we've had just understanding how the sequence works. Okay, so let me clear this out. You had, it won't let me. You had this down AB fib, right? Not even counting that previous one, but this down AB fib where, okay, we trade the B to C, TP1, TP2, TP3, right? To the upside. That was an opportunity. Now, because we understand how the sequence works and I got this 8 taken out, as soon as you get this new AB boundary to the upside, you had another B to C opportunity, TP1 and TP2, right? So based on where we are now, based on what we've seen as far as the confluence, you may not get a TP3, it may reverse, right? But if everything works out, you're saying, hey, I'm limited in, I'm looking to play this reversal now to the upside, there's another opportunity there. So the market is really truly taking advantage of the fact that the market does the same thing over and over again. You just have to know how to frame it out, right? So that you can see it consistently. All right. So these are just the opportunities to the downside. So for example, if you ran limits like so, okay, and you had your AB boundary, wherever that was kind of funny one. But if you had one, hey, I got a new AB boundary, I'm putting an order in, okay, you would have made money to the downside. Okay, so same thing over and over and over again. You've got potential plays all over the place. So that's the Euro CAD. And I was just getting there. You confirm I was on the right path. Awesome, Denise. Awesome. So that's where we are on the Euro CAD. That's one to keep an eye on, right? And even if you don't trade it, right? Even if you don't trade it, if you say, hey, I'm a B2C type trader, I'm good, I've made money to the downside on this correction, then what you're waiting on is to see, is this A gonna get taken out? Because if my A gets taken out, then what's gonna happen? Just like what happened here, but in reverse. If that A gets taken out and it goes through TP3, for example, to the downside, then look, I've got a reversal. I'm gonna have a new AB boundary. I can look to play that B2C, okay? If you're saying, hey, I'm just a B2C trader and this price reverses and you pass on the C to D move, that's fine, right? Because eventually price will make its way to that D extension. And when it hits that D extension, what is it gonna do, everybody? It's eventually gonna form a high and create a new fib. So if you're a B2C trader only, trading a correction, then you're gonna have another opportunity to trade the correction to the downside. So it's literally like, we can't make it up, right? Not telling any stories. It's literally doing the same thing over and over and over again, right? Okay, so, all right, so that's what I wanted to cover there. I want to go and look at this, where am I at? This GJ, okay? Because, hold on one second, double check on something here. So Daniel, we got to go back and give everybody control over that mic who joined us. All right, so if we go to the GJ and we take a look at this, we marked it up. Hold on. And here. This one is still kind of just playing around, but this is one to just keep on your radar. I know we marked it up before, but you still had a potential for a correction on that one. So here we are with this down AB boundary. It pushed up a bit, and then we pushed back down, but we got a stochastic that's almost back into the buy zone. So just pay attention to that GJ on that one for me. That's a potential play, right? So even TP1, if that pushed up, that's like 70 pips or so, something like that. Off of just where it is now. Okay, off his low point is already pushed up 60 pips or so. Okay, so just pay attention to that. Just know that we have not gotten a 382 on that yet. All right, and we know sometimes, right, that we don't. Sometimes we don't get in and push us down. All right, that is what it is. Any questions on that, GJ? So I want to get through these setups for you guys. But if I'm moving too fast, make sure you guys slow me down. No questions? All right, so let's take a look at this pound dollar, because we're not going to, it doesn't look like we're going to get that pullback, okay? Which is fine, just continue straight down, all right? But what I want you guys to keep an eye out for is that, hey, when we don't get a strong correction, right, on a particular fib, and we do get to that D, now it hasn't gotten there quite yet, it's almost there. But if we get that D extension, then this one should be on your radar for a new AB fib to get set up. Okay, and then we look for the correction again, right? We get to the high price, potentially look for the short. Just remember, we got pound monetary policy news tomorrow at Thursday at 7 a.m. Okay, you got Euro news at PMI at 3:30. Okay, along with Swissy. All right, so don't be surprised if you wake up tomorrow and you see some good market movement. But that's where we are. So keep that one on your radar for the pound dollar, right? Just anticipate, right, what may happen, what may occur on that. The pound Swiss. All right, let's take a look at that. And we had talked about how that D extension was probably going to get hit. And it looked yesterday, I believe. Let me make sure I look at my notes. Yep, we said it was close to hitting the D extension, and I looked for a new AB setup. Same thing that I'm telling you with the pound dollar, right? We said that yesterday. This was the previous fib here, and we got the D extension here. We said to look for a new AB setup, and we got it, right? So we're actually almost a TP2 on that. All right, anybody in on that pound Swiss? Yep, strong pullback. Strong pullback. So this is kind of what I was saying with that may occur with that pound dollar, where you really, what we did get, we wicked out there. We barely got that 382, right? So it pushed down, and then look, we've got a nice correction going here on the pound Swissy. So that swing off that B boundary, 47 pips at its highest point was 57. So that's a good play on the pound Swiss. And so when we get to that high price, right, we can look for the potential to short. Because if we go back up here to the daily, right, we still don't have that 382. We got a stochastic that's pushing down, right, out of the sell zone. Okay, so once we get that high price established, or if you're not in that already on a B2C, then you're just looking. See what happens when we get up here to our sell zone, right? And then look for the potential, start looking for the potential and confirmation to short that, right? Make sure everything lines up for yourself on that. So that's the pound Swiss. Any questions on that? No. All right. Same thing with that pound Aussie, right? That Ebony called out, posted in the group. This pound Aussie play, right? Strong, right? We got that ABCD move off that previous fib. And look how fast it is moving through the price action. So this was crazy, right? So we got the pullback on this. We got the pullback to your 786 level on this previous fib. Your D extension got hit. And then at the 127. So here's our 127 zone here. So look at that. This is a beautiful ABCD play, right? So if we come here and look, A, B, C, the highest point within the AB boundary. We just clipped that 786 and then our D extension. Boom. And you can see it started to stall. This is that crazy action for the FOMC meeting and the policy statement. And then you can see here that we got this reversal. Okay. So what I would love to see is I would love to see this pound Aussie push up a little bit higher, even though we're in this back in the sell zone. I would love to see it push higher into my zone so I can look to short it again. Right. That's what I would like to see, is for another potential short to the downside on this. Okay. So I'm looking for a high price now to get it short. This is not my play. If it pushes to the D from here, then it's just a trade that I miss out on. But I want to see a high price there around that 61.8, 786. So I can put my stop above the A and short it, just like we did this previous fib. So that was a great play, great call on that, Ebony. And to anybody else, right, that took the trade and spotted it and did well, right? So that was after that pullback, right? That was at least over 100 pips to the downside. So good job on that. Any questions on the pound Aussie? All right. quiet tonight. Be quiet. Okay. So let's Aussie pound, Swiss pound, yen, pound, dollar. I want to take a look at the Swiss yen because this was a nice. This has been a very nice play, right? Covered this way a while back, but I want to go over it. Okay. So that's from the daily, right? And Casey made a YouTube video a while ago, right? Anticipating this drop, calling this drop, okay? Long-term position trade, long-term hold, right? And it did exactly that. But we know when we're on these lower time frames, right, that we play the price action. So this has been a beautiful trade, almost through 3 TPs, right? So look, this is a beautiful 80-20 swing. Shallow retracement, stalled out at the 118, 127, and then back up, right? And then this may continue, we may continue to see some price action on the upside there. So right now, right, if you look at that, like so, look, it's just making higher highs and higher lows, right? Higher highs and higher lows. So we got a stochastic in the buy zone here. Our daily stochastic is in the buy zone. So this is a daily 382. And so if you wonder how we got that, right, how she mapped out that target, right, you come here to your low, find that deep low on the daily, zoom out, come in, took the fibs out there, pull that back up, find this low like that, and bang, right? So here was that fib, right? And it's been a while. I don't know if you guys remember, some of you that's been rocking with us for a while, right? 80-20 play, look at that. No matter what the time frame, the boundary was broken after a shallow retracement, stall out on his own, and a push back down. And we just recently tagged that 382, okay? So off that weekly level at that 118, 127 zone, that's a 400 and something pip drop. And I think what she called, I think she called it around there, right? So that's down to the 382. It made it to that target. And now we're in the buy zone. So what we're going to see, we get a reaction off this 382, and it's either going to push up with some strong momentum, or it's just going to correct itself to the upside and then push down for a deeper retracement, maybe to the 61.8. We don't know, but all we know right now is that we're getting a reaction to the upside off that 382, right? So again, we got the direction right. We got the direction right to the downside, and on our lower time frames, we've got the direction right on the price swing to the upside. Any questions on that? No? Okay. All right. Did anybody take this trade? No? Left it alone? Okay. Let me see. Juan Wilson, nope. All right, cool. Thanks for the feedback, my man. I appreciate it. So we'll take a, yep. Got a question? No? Okay. So let's take a look at the CAD yen. I know we have posted that in the Facebook group. We marked it up a while ago, so we'll just continue to track the progress on that. So we got the 786. I still would love to see this D extension hit here at the 127. So this has been a beautiful move to the downside, right? We're getting some pullback action on that. And you might be out of this trade already, I don't know, right? But I mean, at its lowest point, you're down close to 270 pips. And now we got some pullback action there. So we'll see. We'll see what happens. We got any type 2 setups going? Let me see. This CAD, yeah. Nah, nothing really. But so that's been a strong move to the downside. Juan Wilson said he got out of that one. Cool. All right, take your money off the table. Good deal. Good deal. Right? Did you get out of it manually, or did you have a trailing stop on it?
Manual.
Manual. Just close it out. Good deal. Good deal. All right. So that was a good pickup on the CAD yen. Let's take a look at the what's that one? The cover to cover, let's take a look at the USD JPY, right? Because we're getting that we've had the choppy price action for quite some time. But you can see on this, on the one, okay, right? You see you got this current fit running to the upside, right? And we've got that fight. So there you go. You see that there? Okay. That's potential cipher, right? Just like that. Okay, so let me move forward. Look, so look, see that? See how we're not breaking out to that downside? See how we're not getting that breakout? Right, that's the key, okay? That's the key, right? That's the key. And see if we can get that 118, 127 push off that sub and confluence with this level here, which is 786.86. See if we can get that 118, 127 confluence off this sub fit to the upside to see if we can get a correction back to the downside, right? So what that looks like is if I take this, all right, how you can map these projections out, right? So if you go here, like so, just like that, and we get that correction up around this level, and you can see the percentages, right? So if we get to that 786 level there, okay? What you do, how you get that correction drawn up, it's just like this, right? That's what it's doing, like that. And then these are your targets. So if you look at that highlighted area, look, 382, 50, 61.8. Okay. So that's what we say. Harmonic patterns is just a fight between the bulls and the bears and between the AB boundary. Okay. So when you start getting all of this mess here, you can look for it. You can look for those type of setups. Okay. Just takes time. Just takes time. So that's where we are. So we know we got this impulse leg pushing up. We know we've got a potential harmonic pattern, right? So what we could do now is we can take these previous, right? It's been all types of plays, and we say, look, potential, right? When we're going over it last night, potential for that W formation. That's those harmonic type setups, right? So you go here. We can eliminate this now. Beautiful B2C move, right? Through two TPs. Move back down to the downside, but we didn't get, right, that 860 extension to get hit. It reversed on us. It double bottomed, right? And now we've got that harmonic setup, so you can just adjust your trend lines, right, to fire off here, okay, to the upside, like so. And see, now that we know that there's a potential harmonic correction, right? Now we're dollar bullish, right? So this just might be a correction to the downside. Okay, that's why paying attention to fundamentals matter. Okay, this might just be a correction like this. Okay, and then a push up to take out the A on this fib. Okay, because we're just choppy. So we may eventually get price to break out if the dollar is going to stay strong. So we'll see. But we know that the immediate short-term setup, right? If we get the trend line break to the downside, you could take it down to the 15, map it out. That we may have a potential for a correction, 382.61.8. That'll take us through two TPs, short move, and then back up long. Okay. Or you can wait. You can wait for the pullback, right? We know that if we get this A taken out, we're going to get a new AB boundary. And if you're a bull on the dollar, then you just wait for an opportunity to buy, right? Maybe eventually a retest, right, of this level here, and then look to get long. Okay. Just be patient, right? If that's your move. Right? You want to see it take out this major level of structure and break out, then you wait for a retest and then you get long on. Okay. The key is being in the arena and knowing the possibilities and the scenarios that could play out. All right. So that's where we are. Right. You get a lot from this what appears to be a mess. All right. So that's it on the dollar yen. Any questions on that? No. All right, so let's take a quick look at the dollar Swissy. And got a lot going on, right? We had a beautiful 80-20 play. We got dollar strength, right? So this type 2 setup here, which I didn't take, I got out, set on my hands on the dollar page, right? So what I would, for me, if I'm thinking dollar strength, all right, and we got some news coming out, right? We got the Swissy tomorrow, their monetary policy statement. We'll see they're expected to hold their rates, right? But it's all in the wordplay, right? And what can happen potentially in the future, in the near future. So what I would love to see is I would love to see this move push down deeper, right? Deeper, and look for a buy opportunity on the US dollar. That's what I would like to see. So we'll see how that plays out. Like I said, I'm not in this at all anymore. Got out of TP1 because we knew that the FOMC meet was coming up today. So I would love to see this push down, and we may get a catalyst tomorrow, depending on what the Swiss National Bank says. So I would love to see this push down, like so, to a deeper level, and then I can look to potentially buy that long on the dollar Swiss. But we'll see. We shall see. Thanks for going over that. I'm always confused when you get ranges within the AV boundary. Yep. And then Ken, like, if you get it right, and you don't even have to, you don't even have to, understand harmonics. Like, if you see where you got a lot of ranginess within an AV boundary, think about just regular price action, right? If I was trading the naked chart and I saw a price that was just ranging, right, and I saw candles that were just ranging, you just say, hey, no play, right? So if you don't spot the harmonic in that range, just, hey, no play. I needed to break out. I needed to break out to, to the top side, right, and take out my A and show me a stronger direction of the trend, or I needed to push down. I'm gonna let this finish out at its extension, and then we can look to play the game all over again, right? So if you don't pick it up, right, because sometimes I won't even spot the harmonic. This time it's just like, all right, I missed that one. But if you say, hey, just put it in your trade plan at, if I get a range on a higher time frame, like a daily or something like that, and that range is giving me, so it's probably better if I just draw it out. Okay, so if I'm on my daily time frame, we know that the higher time frames are larger candles, more data. So if I get a range of candles, right? If I get a range, and that range from bottom to top, top to bottom is like 200 pips, right? 300 pips, like you can get from your higher time frame, then you could play those type of ranges, right, on your lower time frame. So you just track it like so. So you say, all right, I'm in a range. And we know that the Forex market, a lot of times, it ranges. So if you spot a range, like on the, let me go back to the, before I draw it out, to the Euro USD, right? If we go back to the Euro USD, and the reason why you see this is kind of highlighted gray, right, is because if you go to the daily, look at it, look, see that? That range, right, is almost 250 pips, 244 pips. If I spot that, then you could play that on your lower time frames, right? So you can play that. If you let me see, go back to where we were. So we know that because when you get a large range like this, we know that the market is going to move in waves, right? It's going to move like this, right? It's not just going to go straight up and straight down. It's going to go like that. So the key is identifying it, right, on a higher time frame. And then how you play that range is you could play, right, what we like to say is the 1, 2, 3 or so, where I need a trend line break. Right? Okay, if I get that, I notice this is the top of the range, I get a trend line break. I get a strong candlestick formation, like a bearish engulfing candle that breaks conventionally on the backside. And then I need my stochastic to be in the right zone. So in this example, I need that stochastic to be in the sell zone, right? Like so. I need my stochastic to be in my sell zone. Then I look to take that short, because what's going to happen, if this is going to go from top to bottom now, it's going to go in ABCD waves, right? Like this. It's going to go in ABCD waves all the way back down to the bottom. All right, like this. So as long as price stays in that range, okay, then you trade it as such, right? Then you trade the range, okay? Like so. Just like that. And now, all right, I need something that's right? My 1, 2, 3 trend line break, bullish candlestick formation, backside of the trend line, stochastic in my buy zone, right? And then I trade it back to the top of the range, like so. And then eventually you get a range breakout. If you don't like trading within the range, right? Which understanding the fib sequence really helps you to be able to do that, because then you know how to mark out your targets, right? If you don't like trading in the range, then you just say in your trade plan, I'm a breakout trader. If a trade is in the range, I'm not going to trade it until when? I get a breakout, right? Because usually a breakout likes to come back and test, in this example, the top side of the range somewhere in that zone, right? And if that's your thing, then how you're going to play that is you're going to say, I need a retest of the range. You still play it on a 1, 2, 3. I need a break. Boom. Right? And then I play the range to the upside. All right? Just like that. So you could trade the range, or you could trade the breakout of the range. You can identify that. There's traders that are just breakout traders. Look for ranges, look for breakouts, either to the upside or to the downside. Right? So if you notice that on your higher time frames, then you play that. So if we go back and we look at something like the UJ, right? And you can see how that's pushing up, right? So if that continued to push, that means that harmonic pattern fails. No biggie. It takes out my A. We already know what type of game we're playing. We got dollar strength anyway, right? So the key is just putting yourself in the right position to play the scenarios out. So look, we already know. Look, we already got that drawn up, just sitting there. It's gonna do something. It's gonna do something. That's from the monthly, right? This is what the price action has looked like on the dollar yen, right? And these are monthly candles. Look at that. We're almost at the end of this month. 1, 2, 3, 4, 5, 6. 6 months, pretty much trading in the range, right? So something to keep in mind when we're thinking about range trading ranges and things like that. So this one here, like, that's just, hopefully we get a breakout, right? Hopefully we get a breakout. That's a monthly stochastic, so it's not too important. So if we look, right, our daily is in the buy zone, okay? So we may get that push up now that we've got dollar strength, now that the market is starting to gain some clarity with the feds and what they want to do, right? The rest of the world is watching, okay? They can feel a little bit more comfortable trading in the markets, right, on the stock side. So look at where we are, right? So maybe we start taking out some of these levels, right? At least back up to 110, right? That 110 is constantly critical with the dollar yen. Constantly see that level over and over and over again. 110, 110. So, right. So we can put that there. I'm gonna link that down. And we look at it, where that's at on the relation to the 1. Look at that. That's that level, right? So if we took this out and we said, all right, no fibs, just price action. See that? Look. We just use the fibs to look at for the U-turn points. But look at where you are, right? Look at where you are. Could have easily just drawn that up. Look at that level. See that? Right? Look at that. Right? That's where you are on that. That's a zoomed in view of a larger type of range. See? So look at your levels and where we are. Okay, so we drew that one up. Look at that. See how choppy it's been? That's when you get those tight support and resistance levels. So you could come here and you can say, man, if you come here like this. And if you're looking at key area, right? Where it's just like, all right, then we'll have this level here, okay? See? Look at that. Let me take this off real quick. Take these levels out. Look at that. This right here, what you're seeing, is the top of that triangle. See? Right? Higher time frames matter. Okay? So you can track that on the one. That's the top of that triangle there. Okay? You got one, you got a level here. Okay? So, right? Boom. Just like that. That's where you are. You got dollar string. Here's the range, right? Here's the top of that triangle, right? Here's a double bottom, okay? Right? No fibs, playing in between the levels, right? Look at that. It's still a game of price action, support, and resistance, okay? That clean it up for everybody there? Can everybody see that? Right? That's why we always start out market support and resistance. And we'll play the fibs to help us target potential U-turn points, patterns, things like that, right? So there you go. All right. One, right? Look. 1, 2, right? 2, 3 times, right? Probably more than that. You scroll back 4 times, right? At that level, okay? And that's where we are, right? So hopefully you got a little clarity on that, okay? So we're coming up to a key zone, right? Key zone. If you look, if you zoom out now, this is what we drew up, okay? Right? See up around this level somewhere like that, right? How we had it, okay? Not quite. I had to go back and put it still cipher type setup, but like that. And so what you're saying is, when you spot it like that, you're saying, okay, there's that potential, right? For the correction, and then to move back up to that zone, right? Correction, then to move back up to that zone. That's it. That's it. But if you had none of that, you can still just use support and resistance and map it out, right? Fibs just help you find U-turns in between and map out targets of where price may end up for a TP target. All right. So that's it on the UJ. Any questions on that? It's a good lesson in that. Hope that helps people. No. All right. So I want to take a look at this NZD USD. And we can wrap things up for tonight. All right. So, 1 second. Look at this NZD USD there. And I just want everybody to keep an eye on this, right? Because we're continuing to push downwards, right? So what we want to see is the potential, right? The extension that'll get us to this fib that's brought down from the daily to a 61.8 and a TP2. So everybody just keep an eye on the price action for this NZD USD play there. Okay, so we're through TP1, looking at TP2. All right. Any questions before we wrap things up? UCAD. Yep. Let me take a look at that. So we're coming in the UCAD, and right, this is how I've got this drawn up on the UCAD. You got choppy on the 1 hour with the back and forth, but if you come in and you look at the daily on this level here, right, we got dollar strength. I don't know what the CAD is going to do. We'll see. I got to go back and look at that oil inventory report. But if you look at this UCAD, how does this driving up through the zone? I drew this idea off of a sub to the upside, right? And based off of dollar strength. So if I pull this down to the 1, right? This is that move off that A6 level to the upside. So we've got a stochastic right now that's overbought. What I look like on a daily. On a daily, right? We're moving into it's being overbought. So here, see what happens. What I'm looking for is I want to see what happens if we get price, right? Because right now you can see over top here. Okay. All right. We got this. Okay. And if you were to draw fibs on that, you would have had a new AB boundary and it took out all the levels. It was just a crazy move. So let me map that out because I just redid this today. So there. So this was the 1 hour fib, and you can see that it formed an AB boundary, and then right away, right, it just pushed down and took out these levels. Okay, so if you map this out to the downside like that, right, you can see that D extension got hit and it's just moving all over the place sideways. It hasn't even given us a new what's the name yet. You got this here. So what I want to see, it didn't give it to us automatically though. So what I want to eventually see is it just falls in line. I want to see what happens when we get to this trend line, right? So when we get to this down trend line, we know our stochastics aren't aligning right. I want to see what happens when we get here, right? Once we get here, then I want to see if it pushes lower or if we get a reaction and then price comes up and breaks and we continue long based off of dollar strength. So I'm not playing anything on it right now. I kind of want to see if we can get a test of that trend line, right? We almost got it, right? With that 127 move back up. But I want to see if it comes down and if it retests. So no play on that. Right now, I didn't even play the short off that AB boundary. I just stayed out because of what was going on with the news. But you can see it's just choppy. And so I'm just looking for some clarity on that, on what it wants to do now. Yep. Any other questions on that?
Hi, Benny.
Hey.
It's Eunice.
Hey, how are you?
I'm fine, thank you.
You're welcome.
My question is about the AB that didn't give the automatic AB. Is it because a swing low was not formed? Or
Like why does it get hit?
oh,
Yeah, so it got hit. It got hit, but sometimes it'll take a minute. Like when you get like a fundamental like an announcement that happened today, like you see how it created this huge spike down and back up. Sometimes it'll throw the fibs off for a little bit, but it'll eventually correct itself. So I mean, I just slapped that. That's my C. That's my highest point within that AB boundary, and then that's the D. But it really should when it corrects itself, it'll probably look something like this, like that, right? But it's just that move happened so fast, it hasn't caught up yet. But it still puts you in the same situation where we're up against this down trend line. We're in the sell zone. We got a daily stochastic that's moving it into the sell zone. I just want to see what happens as far as if we can get a push back down to this level and then see what dollar strength looks like at that point to see if we can get a reaction. So I'm kind of on the sidelines with the dollar CAD right now, right? Some people may have taken that B to C move and it took out all three TPs. That's a good play if you did, but I'm just kind of waiting and seeing, right? There's better setups out there on other pairs that you can trade.
thank you.
Oh, you're welcome. You're welcome. Good question. All right, so that is it for tonight, everybody. So we went over a couple of potential setups for everybody to keep their eye on. And hey, keep working hard, keep grinding, right? It's the reps that count. And what really counts is that all of you are in the arena, right? When you're in the arena, that's where the credit goes to the people that's in there fighting every day, trying to learn and master this skill. So again, I appreciate everybody for being here this evening. And we are going to wrap things up. And we will be back tomorrow, right, at 7 a.m. in Ryan's trade session. So until the next time, everybody, have a good night. You're welcome. You're welcome.